Let's talk some stocks. We do have some news in Tesla as the shares have been moving higher. They've been ripping here the last about 4 or 5 days, Renita. Kind of carrying the torch as some of the AI stuff fizzled out. Tesla's got its groove back.
It does, and it came through charging networks. So today, or actually last night, I saw this news come through as I was leaving the newsroom that Tesla is opening up its charging network to GM vehicles now, GM EVs, and that makes 12,000 Tesla superchargers available to GM EV drivers in North America. That'll begin in 2024, and beginning in 2025, GM EVs will be built to gain direct access to Tesla superchargers without an adapter.
Tesla's stock price is on its way to hitting the $300 mark, and it's all thanks to the automaker's latest revolutionary moves. Tesla's actions not only demonstrate the magnitude of its influence, but also showcases the collaborative efforts shaping the future of sustainable transportation. These recent updates are expected to make waves in the electric vehicle market and also disrupt the competitive landscape. Managing Director and Senior Equity Research Analyst Dan Ives shared his thoughts in a recent interview, citing the enormous benefit that this has for Tesla. But that's not all. The stock expert also raised his price target on the stock a few months after citing lowering margins as a huge resistance to Tesla's stock performance. In this video, we will delve into the fascinating story of how Tesla has overcome investors' fears and reached analysts' standard for a top-rated stock. So stay with us as we discover valuations, predictions, and estimates from big names in the investing world. It promises to be an exciting ride.
So, 2/3 of the world is covered by water and the rest is covered by you, Dan Ives. There's a lot of stocks in your universe that you cover, but Tesla's certainly right up there. What is it about the stock right now and the company that is giving you so much bullishness?
Yeah, I think what's happening, it's a sum of the parts. I'd almost call it an AWS moment, almost an Apple services moment for Tesla. Because what's starting to happen now is that the 313 area code, after years of resisting, they recognize they need Tesla. And I think when you look at the supercharger perspective, from a revenue perspective, you go out 2025, GM Ford, they get 15% share. You're looking now an incremental $3 billion, $4 billion a year of revenue that was not there. And I think what's starting to happen right now for Tesla, from batteries to supercharger to storage, the sum of the parts thesis is now starting, I believe, in the early stages to play out with investors. That's really what's starting to happen now with the stock, in my opinion.
GM and Ford recently announced that, starting next year, owners of their electric vehicles would be able to use Tesla supercharging stations, and Wedbush security analyst Dan Ives sees something big at play here. The analyst raised his Tesla price target from $215 to $300, adding that the recent collaborations represent a large monetization opportunity for Tesla. According to him, Tesla is just getting started with selling access to its infrastructure and technologies, and an AWS moment is at hand. Hello, everyone, and welcome back to Tesla Tomorrow. Before we dive into details, let's take a moment to actually visualize how interesting the AWS business model is. AWS refers to Amazon Web Services, which went from a risky bet to an enormous success for Amazon. What is today a dominant cloud computing platform started as essentially an internal cloud that the online retailer built for itself out of necessity. Selling access to the infrastructure it had developed turned out to be a genius business move for Amazon, surprising the company and outsiders alike with its success, and making the then CEO Jeff Bezos even wealthier. Today, Tesla has infrastructure and technology which it had developed for its own use and is also now allowing legacy car makers to benefit from this infrastructure too. Could this be the determining factor for Tesla's growth in the near future? What lies ahead for Tesla's investors in all of this? Keep watching as we bring you all the details. But before we start, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Tesla. Dan Ives told CNBC that he believes this is just the first step for Tesla. He added that the automaker started with superchargers and, ultimately, the next step could be battery technology. He said, "I think that the golden goose right now is that they've built the castle and are waiting for others to call." Ford CEO Jim Farley and GM CEO Mary Barra have made the call. As for the possibility that supercharger access will help GM and Ford sell more electric vehicles, Ives suggested that it's not an issue for Tesla, since Elon Musk has said Tesla needs GM and Ford to be successful for the broader EV vision, in terms of just adoption in the United States. Elon Musk recently tweeted that Tesla aspires to be as helpful as possible to other car companies and is enabling these companies to use our supercharger network. He also added that he is happy to license FSD or other Tesla technology. Ives' major fear for Tesla has been its lowering margins, especially since the time of the price cuts. The Wedbush analyst lowered his price target for Tesla by $7 earlier this year, after it reported declining earnings and margins, although he remains bullish on the Tesla story. Ives said at the time that Tesla's softening operating margins were delicate issues that were keeping Tesla investors up at night. He stated in a note to clients that while Tesla delivered mixed results with solid demand metrics, the real elephant in the room is softer margins which will weigh on shares. Ives added that while he remains very bullish on the Tesla story, the margin compression and price cut narrative must be carefully managed over the coming quarters as it emerges as a clear overhang on the stock. Wedbush has stated that Tesla's 1.8 million delivery plan remains achievable, citing Musk's comment about Tesla's annual goal on a previous conference call. Ives described Musk's comment as a clear positive in a shaky macro. However, while the analyst maintained an outperform rating on the stock, he lowered his price target from $225 to $215, reflecting further near-term margin softness in the next few quarters. Interestingly, Tesla's revenue and margins are about to get really tantalizing, following these new partnerships. Ives said the automaker could generate billions from its Ford and GM charging partnerships in the years ahead, and he thinks the company is just getting started with that kind of services revenue. Ives referred to the two carmakers as early ambassadors to Tesla's plan of granting access to its technology. According to him, from batteries to superchargers and even to storage, the sum of the parts thesis is now starting to play out with investors. Dan Ives isn't the only analyst who is positive about this. For instance, Piper Sandler estimated in a research note that Tesla could add upwards of $3 billion in charging revenue from non-Tesla owners by 2030 and $5.4 billion by 2032. Such revenue and federal incentives will also help Tesla expand its charging network. Similarly, Goldman Sachs analysts estimated last year that the expansion of Tesla's charging network to competitors would bring in between $1 to $3 billion in added annual revenue for Tesla. Wedbush states that Tesla's deal with GM, as well as a similar agreement with Ford, could bring in an additional $3 billion of revenue in the coming year. And while this will create significant opportunities for Tesla, Ives believes that the move was also smart for GM, as it will help it achieve its objective to expand charging capabilities for its drivers by giving them access to 134,000 charging stations. One may argue that these partnerships could encourage some customers who might otherwise buy a Tesla to purchase a Ford or a GM EV instead. However, it's noteworthy that for Tesla, the benefits sure outweigh the cost. Do you share the same thoughts? Let us know in the comments section. And don't forget to tell us what your valuation on Tesla is. If you would like to know what Tesla has been up to these past few days, go ahead and click on the next video on your screen. See you there.